Hey everybody, this is Jim at SP500chart.com. It is after the close on January 28th, 2013. Before we look at the chart, I need to remind you that the website and the video are for educational purposes only, and that nothing stated at the site or in the video is intended to be used as investment advice. I control lines on charts, but you have to draw your own conclusions from your own research. You need to make investment decisions that are suitable for your personal financial situation. I'm not a licensed financial professional. I'm just a guy who draws lines on charts. Guys, this is another one that we can make short and sweet. We were in a channel. Actually, just to recap, we were in what appeared to be a pretty broad channel, which for the most part hangs up in the upper half of this channel bounded by these two turquoise lines. Okay? But as we look at the past 3+ weeks, then we see that we've also been in a red channel that has existed for the entire year. Well, here it is, the 28th. It's lasted since January 2nd when we had this big gap up back here. So, what are we looking at? Well, you know, I've been saying for the past week and a half, maybe a little longer, wait for this line to break. As long as this line doesn't break, this sucker's just going to keep going up. So be content to ride it. But when it does break, then we start looking for signs that this rally is over. And if that is the case, and I really hope it is, because I think for this market to be healthy, it needs to breathe. It's time to exhale a little bit of money and come down to the 1440s. I would love to see that happen. Now, let's take a quick look here at what's been going on for the past 3 days. We came up to the top of this channel, the red channel, slightly over the turquoise channel, and up here for the past 3 days, to my eyes, it looks like we are forming a flat-topped triangle. This also can be called an ascending triangle because the bottom line is ascending while the top line is flat. What does this mean? Well, it means we look for either this line or this line to break, which will happen tomorrow. It almost has to, because as you can see, the apex of these lines extends, well, it doesn't have to. We could close at 1502.83. Wouldn't that be funny if it did? But we could close right at this apex tomorrow without breaking the lines. But you see what I'm saying. If this top line breaks, then we look at this as a bullish continuation pattern, even though it's not happening in what should be a particularly bullish place. And if that's the case, then we would have a target of roughly 1514 from it. But if the bottom line breaks, then we would have a target, gee, isn't that funny, right down at the bottom of this red channel. So let's keep an eye on two things. Keep an eye on these two lines that bound this triangle, and then keep an eye on one or both of these red lines, because whichever way this triangle goes, it looks like it's gonna, isn't that funny? Where that apex is exactly in the middle of this channel. Let me show you again. There's our projected target measurement, which is the height of the pattern at the first reactive move. There is our upside target, 15, 13, and some change. And a downside target would depend upon when it breaks, but you can see this bottom line is almost parallel to this red line. So wherever this might break, if it breaks to the downside, then it points to at least this bottom line here, the support line in this red channel. Now, if that breaks, then I think we start to see a little bit more serious selling pressure. But so far that hasn't happened. So let's watch this little pattern, and then let's watch this channel. Look, guys, that's a video for January 28th. I appreciate you taking time out of your day to watch it. Look for another video after the close tomorrow. Thanks.